Imagine a trading floor at the New York Stock Exchange. It takes thousands of people to keep that engine running. But recently, the CEO of the New York Stock Exchange looked at a digital platform built by exactly 11 people and called it bigger than the Nasdaq. This platform is giving everyday investors access to assets that used to be locked behind velvet ropes, like the ability to trade SpaceX stock before it ever goes public. Heavyweights from traditional finance are noticing, with massive legacy players like Goldman Sachs already securing their positions inside the ecosystem. This project moves past the internet jokes often associated with crypto. It represents a move towards putting the actual machinery of global financial markets directly on the internet, where they can run 24/7 without human intervention. The project driving this is called Hyperliquid. Think of it as a fully automated digital exchange. It completely strips away the brokers, the clearinghouses, and the middlemen that usually slow down your trades and take a cut. It does this by operating as what's called a Layer 1 blockchain. Picture most public networks like a crowded city highway, packed with different traffic competing for space. Hyperliquid built its own dedicated high-speed rail line next to it, reserved exclusively for trading. Because it owns and controls every inch of that track, the platform processes trades instantly, matching the exact speed of an institutional desk on Wall Street. To keep this dedicated network running, it relies on its own native digital coin, called HYPE. By building the system this way, Hyperliquid merges the blistering speed of traditional banking with a system where anyone can participate directly, without needing an invite or a bank's permission. That combination of speed and accessibility has pushed the HYPE token to a total global valuation of roughly $16.5 billion. This diagram shows the revenue engine. Every time someone makes a trade, the system collects a tiny fee. Hyperliquid takes 97% of all those trading fees and funnels them straight into a central digital vault, known as the Assistance Fund. That central vault then takes all that collected capital and goes shopping. It actively buys HYPE tokens right off the open market. Once those tokens are pulled into the vault, they are permanently destroyed. They simply cease to exist. If you're familiar with traditional stock markets, this is the exact same strategy corporations use when they do aggressive stock buybacks to reward their shareholders. As long as people keep trading on the platform, the system constantly buys and removes its own coins, creating a tighter supply backed by actual revenue. This chart tracks what that tight supply has done to the price. The coin launched at under $4 and recently broke through an all-time high of $67.24. This growth is remarkably fast. The horizontal axis here shows that this entire climb took less than 18 months to unfold. Right now, market sentiment is euphoric, largely because over $100 million has recently poured in from professional investment funds called spot ETFs. Traders are watching the $70 mark as the next major hurdle. If the excitement around trading SpaceX shares keeps up, many investors are targeting $80 next. The growth on this chart isn't fueled by social media buzz. These numbers reflect billion-dollar banks and thousands of new users moving their actual trading onto the platform. Before you consider investing, you need to weigh the hard facts against the risks. On the positive side, this platform is not speculative. It generated $950 million in actual fee revenue in 2025. Add to that the fact that leaders at the New York Stock Exchange and major fund managers are publicly validating the technology, and you have an incredibly strong foundation. However, there is a major catch, known as a token unlock. This is when new coins that were previously frozen are released into the market. Through 2027, nearly 10 million new HYPE coins are unfrozen and paid out every single month to early contributors. It's like adding new water to a swimming pool. It dilutes the value of what's already there by increasing the total amount of coins in circulation. There is also the constant threat of competition. The world of digital contract trading moves fast, and if a rival platform builds a better engine, Hyperliquid could lose its lead in days. So while the revenue generation is exceptionally strong, that monthly flood of 10 million new coins creates a constant, heavy downward pressure on the price. Ultimately, Hyperliquid has real, measurable results that most projects never achieve. But if you enter the market today, you are buying near all-time highs, while facing guaranteed dilution over the next 2 years. If you decide to take a position, you can access the asset on major platforms like Bybit or Coinbase, or you can go directly to the Hyperliquid exchange itself. I want to hear your perspective on this one. Drop your personal price target for HYPE in the comments below, and please like and subscribe so you never miss a breakdown like this.
And remember, this video is entirely for educational purposes. It is not financial advice, so please do your own research before putting your money into any asset.